Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey everyone, good morning and welcome back to another live stream. I hope you're doing well and happy Thursday. Real quick as we get started, as you just saw, the link has been dropped in the chat. If you want to check out DNA Funded, that promo code A1T20 will get you 20% off any of their challenges. We got a little bit of volatility here, guys, so might not be a bad time. I've actually made this video in the past. Look, everybody take what I have to say about prop firms with a grain of salt, because I am fortunate enough to not have had to kind of go the prop firm route. I do know a good bit about prop firms, just inevitably from both sides of it, like studying it from the trader's perspective, also from the business perspective, just because we have, all sorts of different sponsorships and things like that. Here's what I would say is there is, if your strategy performs well in volatility that is higher, keep an eye on the VIX if you're a prop firm trader. I know these things sound disconnected, but they're really actually quite connected. If you go out and you buy a prop firm challenge and the VIX is really low, you're not going to get very much movement, and the challenge is probably going to actually be made harder. Whereas if you go buy a prop firm challenge when VIX is higher, when the volatility of the market is higher, you're more likely going to get some kind of big moves in the market. You could be right or wrong about those big moves, but if you get a big move in your correct direction, that's typically how a lot of traders try to kind of catch the possibility of passing prop firm challenges, is they need some sort of good risk reward move. And so, oftentimes if you're correct around direction and you get a volatility spike, that's where you get moves in your favor that are big. That's the combination. Okay, so we have a little bit of movement lower. I have to be so real about markets right now. My gut feeling is I want the markets to go lower. I think that they're going to go lower. I have a number of reasons why I'm cautious around stocks, but my mechanical to-do list does not have shorting the indices on it. Okay. How do you know when it's high? I assume what you mean. And Ballout has got you. Yes, correct, Ballout. Just check the VIX, right? If you want to know what volatility is doing, add this to your watch list. I actually have I have a long call vertical spread on the VIX right now. I need the VIX above, I want to say like above, what did I pay in premium? I bought the $15 calls on the VIX out to like November, and I paid, I think, like $4 in premium. So to overcome my cost, I need anything above like 19 on the VIX, and I'll have a very nice payout on the VIX. You can trade the VIX. It is not necessarily as easy as it looks. The VIX looks so easy to trade. You're just like, oh, just buy it when it's low and sell it when it's high. It's really simple. If only it were. If only it were. But I did buy some calls on the VIX. So far, they're in profit already because I paid so little for them. I really caught I literally bought VIX calls right there. So with the VIX jumping up here, those VIX calls are at least starting okay. But this is not the move, guys. This is not the move that I was playing for. Yes, we've got a little bit of rise in the VIX right now, but I have let me back up. For people who are not options traders, even if you aren't an options trader, I think it's really important that you watch the VIX. The volatility index shows us over time the market's expected moves going forward. When the marketplace is really fearful and people think there's going to be ginormous moves, the VIX spikes. It moves much higher. Now, what this also entails is that buying options, like buying puts and buying calls, becomes really expensive because big moves, the options market is like, oh, we want more premium if we're gonna sell you a call or sell you a put. But on the opposite end, when volatility gets really low, guys, again, if you are not an options trader, this is still very important. If you have a very low VIX, what that's telling you is that the market currently thinks there's not very much movement ahead. And that has been apparent in almost all markets. Most markets are not very moving heavy. They're like really quiet right now. It's a summer month, right? So you've got the VIX seasonality, which we talked about yesterday on stream, if you guys were here for that, during Chris Pulver and I's discussion right around the Fed meeting minutes yesterday. We discussed some seasonality surrounding the VIX itself. Now, seasonality is a fascinating topic, and I honestly don't talk about it enough in my videos. It's a really important concept. So part of the reason I went long the VIX is because seasonally, we've gone from the summer months, June and July, May, June, July, and August. You typically see in the last 10 years, that is a period of low volatility. It's a little quiet out there. Then you get into August and September and the market wakes up. So that is, what I'm playing for, where I essentially have a position, a long call. So I'm buying calls on the VIX, thinking that if we are going to see some spike in volatility in coming months, I want to be there for it. I want to capture that upside. Not only that, I do also still own a lot of stocks that I have in my portfolio just sitting there. So to protect my downside, which by the way, also, if we take a look at the S&P 500, look at this. So if I go SPX, right? S&P 500 is coming into its seasonally worst performing portion of the year. September and October are last 10 years, they've been underperforming months, right? So that's something to think about. What's up, Ivan? Good to see you, man. Been sick for over a week. Man, I hope you feel better. Sorry to hear that. So long story short here, I have some bullishness on the VIX. I think that volatility could expand. I'm definitely more on the pessimistic side of indices, at least in the short run. Never long term. It's very hard for me to stay bearish, great companies over the long term. But I do think that the market has gotten a little frothy. Take a look at like Palantir Technologies, and this just goes to show you how absolutely quick darling stocks like momentum, retail favorite stocks can fall from grace. Now, this is not even close to where Palantir could fall if the market truly rolled over. Like, you're talking about the market has not even pulled back 5%, and Palantir made a 24% drop. Would I short Palantir? No, I would not. Shorting like favorite stocks is probably one of the hardest games I know. So it's not a game I play, but it is worth watching just to see, if you're going to get a Palantir type move starting to roll over, even if you don't trade stocks individually, this could signal something bigger for the NASDAQ. You may be seeing some of the excitement coming out of the NASDAQ, and you may see some pullbacks that are bigger than just, kind of the retail favorites. There's several retail favorites that are under pressure. Take a look at Coinbase. Coinbase, obviously the notorious, place to buy and sell cryptocurrency, publicly traded company, down 32% from those highs, right? You have the S&P 500. This is not even a 5% pullback. You're talking about we've seen 2% down. I think it's very reasonable, very possible that we get a 4, 5, or even a 10% correction. Here's the thing. We know markets typically move in waves, right? So when we're looking at the indices and we go low to high with the fibs, if we were to just have a modest pullback on this bigger picture, that puts us at the 38.2% retracement. That move right there would scare a lot of people. Now, am I making a prediction that the top is in and that we're going to make that move right now. No, there's a big difference, and it's really important that we don't, jump to that conclusion, because I find it to be the hardest trade in the book, especially in a bull market, to short indices. Like, I don't do it. Really rarely do I short indices. So that trade to me, though, could make sense on a pullback. If you actually get that pullback, let's just say, maybe the catalyst here is maybe the Fed doesn't cut rates very much this year. Maybe that surprises the market. Market thinks we're going to get a couple rate cuts this year. What if Powell takes the stand and he's like, we're not getting cuts, basically? Are we crashing soon, Trader Nick? I kind of hope so. Not actually. I don't want to crash, but I would love a pullback. But it doesn't matter what I want. At the end of the day, mechanically, what am I going to do? I'm not going to buy when markets are what I believe to be too high, and I'm not going to short a bull market. What am I going to actually mechanically do? I'm going to buy pullbacks if they happen. Otherwise, I'm going to do nothing. That's it. It's really that simple. I like the longer term story for the AI trade. I think it's real. I think there's serious efficiency and further profit margin expansion for companies in the United States. I believe in the story, but I don't like buying stocks when they're incredibly expensive. They are expensive right now. I'd rather buy them when people are kind of afraid of them, at least to a small extent, even as a trading perspective, right? I just don't want to buy the froth. I don't want to buy like, oh, everybody feels great. Everything looks good. That's just not the time I like to buy. I like to buy when like, oh, we're not going to get rate cuts and the Fed's going to completely turn hawkish and he's going to, there's some opportunity, because then you have that wall of worry that the market can climb. I like to buy stocks when there is something to worry about. It sounds counterintuitive, but typically you don't get to buy stocks at low prices when everything is perfect. You get to buy stocks or indices, trade indices on the long side on a swing trade basis. You get that trade when something is scary, which is why it's hard for people to actually pull the trigger and buy, because it looks like it's going to crash when it starts pulling back. Okay, I've got a couple questions here in the chat. Let me do my best. Savin, I apologize for missing your question the first time. Hey, Nick, I'm an Edgefinder user and loving it, but I wanted to point out that the UK economic heat map hasn't updated the latest PMI data and CPI data. I wasn't sure if you had an issue with the API. Yeah, let me, first of all, let me not miss the news that we have coming out here in just a second. We have unemployment claims. We did get some data out of Europe and the UK this morning. We'll definitely check on that. If it is missing some data, usually it updates within, when did that data come out? Usually it updates within an hour. If it still has not yet updated, I'll take a look at it after stream. Every once in a while you get something with our data providers that's just slow or behind or something, and it is frustrating, but that's why I said the Edgefinder is, there's a lot to it. There's a lot of, data collection and curation and, posting it on the Edgefinder. That process, although it is automated, it is still kind of a constant chasing our tail to make sure data sources are working correctly. Sometimes they break, etc. Anyways, we have unemployment claims coming out in about 30 seconds, guys. This morning, we also have flash manufacturing and flash services PMIs. Let's keep an eye on that. That's going to be an hour and 15 minutes away for that data point. But we have unemployment claims here coming in just a moment. I'm going to pull up our all markets view. See if we get anything interesting out of unemployment claims. This could move the market. Economic data is really, really hot right now in terms of, labor market is really hot right now in terms of the Fed. Let's see if we get unemployment claims. Should be coming in the next few seconds. All right. So far, not too much of a change. Dollar index just a little softer. I'm going to guess that mostly came in line with expectations. Okay, no. Unemployment claims actually did come in a little bit soft. Interesting. Okay, so 235,000 unemployment claims as opposed to the expected 226,000. It doesn't sound like a lot, but these are weekly numbers. And so if you get that spread starting to rise, that can be considered not so great. Okay, so Dollar index is just a little bit soft on that number. Nothing huge though. Gold slightly higher. No ginormous moves to speak of, but still worth adding into our analysis here is the unemployment claims did weaken a little bit here this week. I'm really gearing up here. I'm going to have, well, today is the last day that I'll be doing this. I've been doing kind of a countdown to the Fed series on my channel where each day I'm kind of like covering what we've got, what we're expecting. And long story short, I think that what we're going to hear from Powell tomorrow, I think we're going to get a dovish, like I think we're going to get, I'm sorry, a hawkish cut signal from Powell. Let me explain what I mean by that. I think the US has a different scenario that we came into this year. When we first came into this year, Powell kind of said, we're going to take a wait and see perspective. And I had a good comment on my channel here recently. Someone said that Powell and team will stay on the camp of wait and see, right? Which is what they came into this year. They said, you know, we cut interest rates in 2024. The bond market actually showed, you know, some concerns about inflation. And so they said, we're going to actually take a wait and see. We're going to wait to see what inflation does. We're going to watch employment data, yada, yada, yada. They can't do that anymore. This is where things get tricky because wait and see works when jobs look okay and inflation looks okay as well. When we came into the year, jobs looked good and inflation was in the right direction. And so they said, we'll wait and see. We're going to give it some time and we're going to see what happens. Well, now we've waited and seen. And now what we've got is instead a scenario in which we have jobs data that is showing signs of actually cooling, right? It's not dramatic, and it's not this, right? We don't have this jobs market. If we had this, the markets would be much lower. If we had jobs data like panicking, but we don't have that. So we have moderately softening jobs data. That is something to watch, but it's not something to panic about. But then inflation, what about this, right? So this alone, rate cuts, right? Jobs data softening, rate cuts, right? Well, we have to look at the dual mandate. We have to look at both sides, okay? So let's look at inflation. Well, inflation in the US, we had a producer price index number that actually showed we've got a little bit of heat in the equation. The consumer price index was just a touch softer than expected, lower than expected, which was good. But then core CPI was a little bit hot, and PPI, the wholesale prices, which may not necessarily get passed into the consumer price index just yet. Wholesale producer, you know, the corporations may just be eating the tariff costs is what I'm getting at for now. They may eventually, the expectation, I've heard a lot of people talking about this, the expectation is that, you know, if you do business internationally, you buy products from international providers and then you sell them domestically here in the US, you may choose to, for a little while, we're not going to change our prices. We're just going to eat it in our profit margins for a little bit and see what happens with tariffs. That seems to be what a lot of companies are doing because the producer price index, right, the wholesale level, there was some material inflation showing there. But at the same time, the consumer price index has not yet shown that. So that's the concern, is the producer price index is maybe showing us a little bit of a forward look at to what those prices could be passed on to the consumer at some point. So this suggests maybe we hold, right? And so what do we do with a mixed kind of reading? You can't afford to necessarily just wait and see. If you have jobs data that's showing signs of weakness, or weakening, I should say, and inflation that's remaining kind of stuck, what do? My prediction, my best guess, my educated guess, also based on what the bond market seems to kind of be thinking too, I think you're going to get a hawkish cut from the Fed in September. What that means is I think that they're going to say, we have issues that we're watching on both sides. We have inflationary risks, because the tariff stuff does seem to be showing some potential there to raise prices on the consumer. The Fed does not want that. That can be problematic to their story of inflation. They don't want to cut too soon if that is going to just spike inflation again. But at the same time, the economy is showing signs that it could use a rate cut. The Fed has also said we seem overall pretty restrictive. This is by Powell's own stance. They've called it sufficiently restrictive for a while. Otherwise, they would have hiked it further, right? If they thought that it wasn't restrictive enough to keep inflation started at bay, they would have hiked it further or not cut as much. So they still feel like it's at a restrictive enough level. So I think what the Fed may do, Powell may signal a cut, and then it's kind of like, but we do not have much room from there. Like that's pretty much. And so I think that the market is thinking we're going to get more cuts than that this year. And that is where I have been so cautious in the last few days. I've pivoted more this week. I've really pivoted into Sunday. On Sunday, I basically was like, the risk reward here on stocks doesn't make sense to me right now. I think that there is a possibility, not a huge one, but a possibility that you get the surprise from Powell and it's a negative one. I hope that made sense. I know I went real deep on that analysis there. That is my playbook for the Powell setup tomorrow. Now, I'm not necessarily going out and like buying puts on the S&P 500, but I did buy some calls on the VIX. I think volatility is a little oversold. I bought some calls on the VIX. At the same time, I have been reducing some of my positioning in stocks. I've sold covered calls on a lot of my stocks. So that's what I'm actually doing. I'm not shorting the market necessarily. VIX long calls is kind of a proxy short, but it's a really small position. It's not a big one. I have a lot of stocks that I own. I've sold calls against a lot of the stocks that I own. It's called a covered call. It is still moderately bullish, but I'm collecting income and capping my upside on stocks. If you don't know what a covered call is, I've got a couple videos. You could check those out if you want to. So yeah, that's kind of my positioning going into Powell on Friday. We'll see if I'm right. Maybe I'm wrong. Maybe he comes out and he's way more dovish than we think. But I think the market is sort of a little wobbly ahead of that because it might be thinking, Powell might come in a little bit hawkish. Which stocks are you reducing the size of? Roberto, I will have a stock video up today, and I'll talk a little bit about that. I have two channels. If you're not familiar with my secondary YouTube channel, it's Trader Nick-Stocks on YouTube. And I will be talking more about individual stocks on that. On these live streams, I stay away as much as I can from individual stocks, simply because the majority of the audience on this channel does not necessarily care for individual stocks so much. So I try and keep it a little bit more macro focused and high level on the indices, commodities, and currencies. Gold, still range bound, nothing to do here. What I'm looking for on Friday, tomorrow, Jackson Hole Symposium, is a potential move on gold that could actually get us to materially move one way or the other, right? So if we get a very, very hawkish Powell, it could send gold lower. The trickiness right here is like, okay, if we get a hawkish cut, what does that do to gold? I know it's kind of frustrating, but a hawkish cut to me would signal more chop for gold. Because yes, you're getting a rate cut, that's bullish, but maybe not too many more from there. That's bearish, right? So we could get like kind of this mixed response from gold. If you get a very dovish Powell, which would be a very big surprise if Powell were to signal multiple rate cuts or, come out super dovish, then gold could potentially break out in the coming days and weeks. But right now, I've said this many, many times, and I know I'm a broken record on this, but gold is too choppy for me to take trades on right now. And I've been saying that, and I've been right to think that and say that, because if you've been trying to catch trades, maybe if you're like a scalper and you really know what you're doing, but there's not clean moves happening in gold right now. So if you're trading like back and forth, like if you're buying lows, selling highs intraday, or, on a counter trend basis on like the 15-minute chart, you might be doing pretty well in this environment. In fact, if you've traded gold really profitably recently, my guess is that when the price is going up, you're looking to short, and when the price is going down, you're looking to long, right? But if you're somebody who's a trend follower, price is going up, you're looking to buy dips and keep buying and keep buying and keep buying. This has been an awful environment for that. because unless you're trading like, a very low time frame and catching really short-term trends, but even the really short-term trends, I mean, you're not getting the kinds of moves that we saw back in early parts of this year. Ryan says gold is an absolute mess. Look, I do not mean any shade to gold traders. If you hear me and you're like, yeah, Nick, just give us a direction. Look, I can't give you a direction that I don't have, first of all. And second of all, I love trading gold. It's one of my favorite things in the world to trade. But sometimes you have to put your favorite book back on the shelf, man. You got to wait for it to actually be the right time to sit down and trade gold, because right now it's just not that. It's just so choppy. And I warn, because if you are somebody who's a trend follower and you're not looking at the higher time frames and you're wondering, why am I getting chopped to pieces? Right? This is why. Look at the daily. The daily is in stuck mode. It is absolutely stuck in the mud. And what can we do about it? Absolutely nothing. You can't, I can't, no one can control the price of gold and get it to move. Unless you're some ginormous, unless you're Bill Gates and company, I don't know. But for the rest of us, we just need to wait for it to actually start making moves. If you're a mean reversion trader, like if you trade Bollinger Bands, if you trade support and resistance, just back and forth, like you'll buy dips and sell rips, you probably love this environment for gold. And I would say that's the type of environment we're in, is a back and forth type market. But if you're like myself, where I trade like momentum, gold's not it. We wait for direction to be more clear. We wait for the top setups page to be more clear on gold. Yes, we have a +6, but here's my challenge: is we have economic data that suggests gold could make a big move higher. But technicals do matter. Price does matter. When I actually take trades, I need the combination of fundamental analysis, which you guys know I'm heavy on this channel, but I still need price to be making moves, right? I don't want to be trying to, take a momentum long position with a trailing stop on something that's not moving, right? I need movement for my momentum style of trading. It's been several weeks. The last time I took a long on gold, and I know this is going to look cherry picked, but it is the last time I took a gold long. I went long gold. I took it all the way up, and when it failed out, I closed out, and I have not touched it since. So it has been, for me, it's been like 2 months since I've placed a single trade on gold, and I'm better for it, because this has just been an awful couple of months. And awful is relative. Like I said, if you're someone who likes to trade the chop, if you like to trade mean reversion back and forth markets, you love this environment. And ignore what I'm saying. But I'm just saying, because I know a lot of people trade in a similar fashion. They like to trade those breakouts, those kind of momentum moves. Gold has been rough. So if you feel like gold has been rough and you've been trading it, you're not alone. If you're a trend trader, I've just been staying away from this one. I've been out of gold, not touched it for the last 2 months. And I don't have I love the idea of being long gold. Like fundamentals, I like. Price, though, nothing there yet. So range traders probably enjoyed gold the past few weeks. Otherwise, I'm guessing it's been blowing accounts. Yeah, if you're blowing accounts, obviously that just means you're risking way too big. But the consensus I agree with, right? Generally speaking, this is not a very good environment for trend traders. Gold buy today, put a stop loss below yesterday's low. I mean, if that's something within your style, within your trading strategy, take your trades the way you're supposed to take them, according to your back testing and your system that you have. But for me, really, there's only 2 spots for gold. I know I keep saying it. I've got my 2 zones leveled out. This area, I'd be willing to hold through the chop, because I think that you could get a bounce if you made that low. We've seen a really sharp response each time there. That would be possibility number 1. Possibility number 2 would be if you actually get the breakout with some conviction, any pullbacks and buyer. Like, I like that quite a bit. But until those 2 scenarios happen, I don't need to be donating money to the market makers. You know who's making money? I've said this a couple times. Market makers who sell calls and sell puts on gold the last few months have been making bank. If you are familiar with options at what's in any capacity, selling options is essentially where you can sell other people calls or sell other people puts in the market. This has been a beautiful environment to sell or play market maker, sell puts to people, sell calls to people. In fact, I'm just curious. Let's go look at put to call ratio for gold. I just want to see what's going on here. Is there anything interesting? Put to call ratio. First of all, here's S&P 500 back to sort of neutral territory. So we did go from, everybody was buying calls. Look how that turned out. That was rough. S&P has been down a couple of days. So a lot of the call buying that's gone on has quieted off. You've now seen people probably taking some losses on those calls that they were buying. Let's take a look here as well at the gold market. Interesting. It looks like we're missing a day on this, by the way. Let me just make sure that we have the latest available data, but I think we're missing one day on the put to call. Still, even if we have only up to August 19th on this one, call demand. A lot of bulls out there on gold. So crowd sentiment got kind of bullish on gold, which makes sense. If we take a look at August 19th, actually, I take that back. August 19th was a great day to buy calls if you're super short term. But this will be interesting to watch. Once we get the latest data, I'll look into this because I'm not sure why we're missing August 20th. Put to call ratio is supposed to update each day at the end of the day. It's a daily updated indicator that we have within the Edge Finder. Shows you market sentiment really well. Back to S&P for just a second. So crowd sentiment went from pretty bullish on markets to now pretty neutral. If you do get a big spike to the upside, that has recently been a pretty good buying signal, is these spikes in volatility, spikes in fear. People go out and buy puts like crazy. That's actually been a pretty good indicator of, short-term bottoms for markets as well. Here's NASDAQ still moving a little bit lower here ahead of the New York Open. Oil prices, would like to see this make a move higher. This would actually be a potential short setup for me. If we can get up to this area of resistance, I'd be interested in that. Potentially take some shorts on USO. Let's see, what else do we have here? Dollar index, still really quiet. This has been a snooze fest as well, just like gold for the last 2 weeks or so. You did get the big pop here, and then NFP completely killed that. NFP data was pretty rough. Going to our economic heat maps for just a second. Also, just a quick shout out yesterday. Actually, wait a second. Did we hit 500K subs, guys? Hold on. We were like right there when I went to bed last night. Oh my gosh. You guys are not going to believe this. Look at this. Look at this. Can you see this? See that? Someone hit the sub button and you'll take us to 500K. Wow. That's surreal, guys. Thank you very much for the support. I just screenshotted that. We are sitting at 499,999 subscribers. And someone just did it. You guys, thank you. Whoever just did that. I screenshotted that. Wow. Dude. Oh, man. Oh, man. That is a blessing, and I'm thankful every day to be here with you guys doing this. That is so cool. 500K subs. Just hit that on the YouTube channel. Wow. Wow, wow, wow. Thank you so much for the support on YouTube. If I in any way can help people in their trading journey, honestly, it gives me a lot of joy in my life to be able to do this, to share this passion for markets with other people. I genuinely love trading. I love learning about markets. I love sharing that learning with other people. There's always more to learn. And the fact that I've had 500,000 people join me on this journey to improve in markets and to be realistic and no BS and, share my experience as I go through what has been both one of the hardest things and also most rewarding things in my life. So, wow, thank you guys. 500K subs. That is really, really cool. And I am humbled and grateful every day to be able to do this. Very cool. That's a good day. It's a good day. I'm the 500,000th subscriber. Samuel, thank you. Nick, you've taught me so much since 2020 in trading. Can I just ask, well, I'm very grateful that you've stuck around since 2020, Jay. Just curious, everybody in the chat, how long have you been watching? Some of you guys, I know some of you guys have been in here for a hot minute. Some of you guys have been here since 2020. We had a huge surge on the channel in 2020 when kind of everybody was stuck at home, and my channel just erupted in 2020. 2023, 2022, 24, 1 month, 2 months, 8 months, like 2 years now. Oh man, that's cool. Very, very honored. Okay, so now that we're done having a bashful moment, let's get back to charts. Nobody cares about 500K, Nick. Just kidding. Thank you guys very much. Appreciate it. Wow. Okay, so back to what we were just discussing, because I got a little distracted there. I did want to just kind of come back to this full picture that we were talking about earlier with gearing up for Friday, right? Friday, what's Powell going to say? Well, I can only go off of what I think is most logical. You know, you may get some sort of, some people say, oh, it's going to be super politicized and Powell's going to, give the middle finger to Trump, or maybe there's some of that. But all we can do as traders is look at the data as the Fed says they do and try and make an educated guess as to what the market's going to think and ultimately what the Fed might do. So if I look at the US economic heat map, this is where I get that conclusion, right? I just got done discussing that jobs data and inflation data have some concerning mixed reports. So let's dissect that. Where did that idea from me come? Because sometimes people will comment, I'll say, inflation is this, or I'll say like jobs data looks okay. And people are like, how dare you suggest that jobs data is this? It's so hard out there. And I'm like, I know it's always hard out there. There's like, life is hard. I get it. I'm not saying, I'm not trying to gaslight anybody who is unemployed or something like that. But what I'm trying to get at is, where do we get the data? Well, we pull the data in and we look at the actual reported data versus what the market, Wall Street, AKA, forecasted for those data points. So when we look at, let's try and dissect jobs data first. NFP on August 1st missed in the negative direction pretty bad. We missed big time, and we also revised the previous month's number significantly lower. ADP was actually better than expected. So that's good. That's bad. NFP is the big one, and it was bad. Jobs data for job openings, right? Job openings were also a little bit softer than expected. That's bearish for the US dollar and for the jobs overall market. Jobless claims, which by the way, we just got data points this morning, those will actually flip red. They were worse than expected. So we had higher unemployment claims once this data updates. It updates every hour. So we'll get that data shortly. That will actually also be bearish for the jobs report. Unemployment rate came in line with expectations. That's neutral. I think we all can kind of understand that. And wage growth was slightly more than expected. That is positive for just showing hiring demand. So that's our jobs report. Mostly, it's not looking great. It's not looking horrendous, but this is going to be red again once that updates. So I apologize for the delay on that. That will be red. So that puts us at 1, 2, 3 out of our 5 indicators are suggesting softness in the labor report. At the same time, we have one that looks strong, ADP numbers, and we have one that's completely neutral, came in line with expectations. So that's where I'm saying the jobs data looks a little soft. It doesn't look critical. It's not, falling out of the sky. If unemployment rate was ticking up dramatically, that would be different. But jobs data is not crashing. It's just softening. What about inflation? Can we do the same study on inflation? Which let me try and clear this up here before we get into inflation analysis. So if I'm looking at inflation, the reports that we track for inflation are going to be these right here. Okay. Now you'll notice that wage growth kind of falls in the camp of both jobs data and inflation, because wages do have a play in inflation. So let's look at this. CPI came in better than expected. So that's good, right? Softness in inflation, but that's where it ends. The producer price index was really hot, right? So that's high inflation. PCE year over year, another inflation measurement, came in higher than expected. And finally, wage growth also came in a little warm. So that is where I'm saying inflation is also slightly problematic and moving higher. Let me know if you're following, if this is making sense. do me a favor and just hit the thumbs up button on the stream first and type yes in the chat. If this is making sense so far, if this is helpful, if we're understanding fundamentals here a little bit better because of this discussion, just let me know by typing yes in the chat really quick, or one on the chat, whatever you want to do. Just let me know that this is making somewhat sense. Again, this all matters. This is ultimately what is going to help to impact the dollar. It's going to impact gold. It's going to impact stocks. It's super important. So we have a situation in which jobs look like they're softening. Inflation looks like it's problematic. That's the dynamic we're faced with. So what is Powell likely to say on Friday? We never know for certain because something surprising could happen. But to me, this suggests, with the Fed being slightly restrictive, some people are like, this means he'll never cut rates. Well, maybe, but that's the extremist view. He'll probably cut, it just won't be very much. So cut a little bit. He's like, okay, yeah, I see it. The jobs data is starting to come in a little soft. So let's cut a little bit, but we can't cut too much because inflation is also problematic. I think that's probably what Powell will do. That is my guess. Cut, but not as much as the market wants. That is why ultimately that dynamic is not super favorable to stocks, and why I still think that indices have room to pull back. Now, I think they're a buy on a pullback, but I think they have room to continue to cool off as the market kind of takes its medicine that you might not get a whole bunch of rate cuts the rest of this year, unless you get much worsening data in the labor market. So that is my overall perspective and situation. Also, really quick, what we just looked at, the US economic heat map, the Edge Finder, is a tool to help track economic data. This week, we launched a demo version of the tool where you can explore the features of the Edge Finder and check them out for yourself. If you're interested in trying out the Edge Finder, it is a free demo now available that we just launched. You can look at retail sentiment fully unlocked. You can look at COT data partially unlocked. It is now available on our website, and it is a free thing to do. So to get access to that, let me share the link with you guys in the chat here really quick. So if you are interested in trying out the demo version of the Edge Finder, that is now available. Edge Finder, hold on, free demo version. Here it is. Okay, so if you want to try it out, if you want to explore it, click this link in the chat right now. You can also find this on our website, but this is really easy. Just fill out this form. It'll take you 2 seconds to fill it out, and we will email you access to the free version of the Edge Finder. Takes like 7 seconds to fill out the form, and then you get access to the tool sent right to your email right away. So with that said, we have got now our next show host taking over for a little bit. It is Trader Tom. You guys know him and love him. He's very technical. He's going to be taking a look at FX a little bit heavier for us. I know I didn't really get into currencies very much today, so maybe Tom can help me out with that, which will be perfect. So with that said, we are going to now transition really quick and set up Trader Tom to take over the stream for a little bit just after this quick break. Let me find the, hold on, here comes the promo. I got to find the transition for us. Okay, and here we go. Sorry. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello traders, how are we? Trader Tom here from Simply Forex, and I'm with you for the next 30 minutes. So yeah, let's do this. And if I sound like I've been gargling razor blades, it's because I have. It's a little hobby of mine, but yeah, I've got such a sore throat, guys. So bear with me if I sound a little bit like Barry White. If you don't know who Barry White is, Go check him out. He is the walrus of love. Right, I've literally just got into a trade. Okay, so I'm going to share my trade, guys. I'm going to share you a couple of things that I'm looking at, but also please don't be afraid to leave a question. Leave as many questions as you like if you would like me to technically analyze any asset. So yeah, leave a question. Now, we have just had some bad employment data and Philly Fed manufacturing coming out of the US, right? And we know we've had this bit of a sell-off on the indices. Okay, so this is the NASDAQ, this is the H4, and that news that's just come out has also been taken quite bearishly, obviously, right? So things are quite bearish on the indices right now. And what that has meant from a Forex perspective is the flight to safeties like yen, like gold, right, and like Swiss franc. Excuse me, guys. I'm a little bit struggling today, but bear with me. These are all becoming strong, right? These are all flight to safety. So when the poo hits the fan and, you know, we get a bit of a sell-off on the indices, right, these become strong. And this is what I'm interested in. I'm actually interested in a yen pair right now. And you also have to bear in mind, guys, me and Nick spoke about this, actually. You have to bear in mind my time horizon, right? I'm not looking to hold this trade for days. I'm in a trade for probably maximum 2 days, right? I generally use the daily for direction, and then I enter on the H4, and I'm generally in a trade for a couple of days, right? If not sooner. So with this in mind, indices dropping, yen getting strong, we've just literally entered a pound yen trade, right? I've just gotten in off the back of this wick here. Okay. Now let's look at a higher time frame and let's do a top-down approach to really understand why I've taken this trade technically. So obviously, you know, we've had some news there that sort of backs this trade up fundamentally, but this is a technical trade. Okay, so I'm going to show you a few facts of the chart. Okay, now the first fact is we are at a key weekly resistance level, right? We are. There's no two ways about it. I'm not making it up. You can see it, right? That is a key weekly resistance level. And when we hit this level, we have had a lot of sellers. And currently, last week's candle, we had a bit of a top wick. And you can't include this week's wick, right? It just hasn't finished forming. But you can see how we get sellers at this level. Now, if we drop down to the day chart, just look how these candles have changed, right? If I go back in time, right? You know, yen made a dart for it here, right? We broke out of this. Let's start back here. So you can see pound yen was tracking this trend line. We got some choppy, crappy price action. It dropped, right? We thought this was the start of yen strength. It retraced, right? And we found ourselves back at these weekly highs. And if you look at the candles, bullish, 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 bullish. Even this is bullish in my book. Right now, just look at the candles ever since we've hit this level again, right? Just look at these candles. Let's do them one at a time. Bearish, bearish, it is bearish, super bearish, right? You can see sellers are taking control of this market, right? And all I'm looking to do is take price potentially just down to the next piece of support in here, guys, right? That's what I'm looking to do. So we're bouncing off a key weekly resistance level. We've got lots of selling in terms of candlesticks. And then if we drop down to the H4, you can see H4 structure's been nicely breaking down, right? Price come up to this high. The H4 structure really started to break down here, right? Then it become a little bit sideways and then bang, we are firmly in a downtrend. Okay, so we shall see, right? You know, this is how I technically trade, right? The fundamentals today back up this trade idea, right? We're in a H4 downtrend. We've had a very big rejection candle on the H4, right? Lots to like, right? There's lots of confluence. There's lots of reasons to take this trade. I'll be looking to take it back down to these lows first of all. If not, just leave a little bit more to run back down to this 19750. I like psychological levels when it comes to Forex, right? So yeah, there you go. That's the trade that I am in right now. Guys, have you got any questions? Don't be shy. Okay, Cedric, you just sound British as usual, Tom. Okay. Okay, Slugmeister wants to look at Aussie dollar, New Zealand dollar. Let's do that. Can also say, guys, I took some profit out of a pound US dollar sell trade as well. H4 entry, literally entered there, right? H4 downtrend, right? Just took some profit off of pound US dollar, and now I'm going to let some of the trade run. I've moved my stop to break even. Yeah, so we're in profit with pound US dollar. Right, Aussie dollar, New Zealand dollar for Slugmeister. Slugmeister, are you a baseball player with a name like Slugmeister, right? You obviously must be good at baseball. I'm using an American reference because we're on the guys are from America. Anyway, I digress. Aussie dollar, New Zealand dollar. Now, the thing with any New Zealand dollar pair at the moment is it's all been a bit distorted because of the New Zealand dollar interest rate, right? A couple of days ago, or yesterday, in fact, right? So this has distorted the New Zealand dollar, right? You look at any New Zealand dollar pair, it's just mental, right? There's no value anywhere. Pound New Zealand dollar flying, New Zealand Swiss dropping like a stone, New Zealand dollar, US dollar also dropping like a stone, right? So that makes New Zealand dollar tricky to trade, right? Any New Zealand dollar pair. Because there's no value, right? There's no value up here. If it starts coming back into these areas, I'm interested. And you can see I've got my alarm here, right? And I'm going to explain why. So let's do a top-down approach. Now, this is how I approach the market every single time, okay? Nothing ever changes. It's dull and boring, right? And that's what your trading should become. Yeah, if you're doing trading for kicks or quick in and out, go to a casino, right? My trading is slow, dull, and boring, right? Come join the channel. What a glowing reference for my channel. But it is, my trading is slow, methodical, and boring. That's how you want it. Now, if we look at the weekly chart, let's put in some resistance levels, right? You can see there is clearly a resistance level up here, right? Now, looking at the weekly, okay, we are in an uptrend, right? We had this little bit here, but we're in an uptrend, okay? We're getting higher lows, higher highs, okay? We're in an uptrend. If we go down to the day chart now, right, and we've got all of this room to move into, right, until we hit the next piece of resistance, okay? And we are firmly on track to hitting that, right? We're in a total uptrend. Daily is bullish, weekly is bullish. Got a little bit sideways here, but then New Zealand interest rate, bang, we want to go higher, right? I want to buy Aussie dollar, New Zealand dollar. But there's no value for me up here, right? When price pushed up here, there's no value because really, I mean, if you traded the day chart, you need to put your stop there and there's your target, right? Do you even get 1:1, right? So what I would look for is this. Yeah, you can clearly see there's a level here, right? And what was once resistance, right? When we break and it retraces. If it retraces, right, it might not. It might just shoot off. If it retraces, then I'm interested. If it shoots off, there's no value for me. I'm not interested in the trade. Simple as that. So if price pulls back into this level, right, and we get a bullish candle, I would look to buy Aussie dollar, New Zealand dollar. And generally speaking, guys, I just use the daily and the weekly to tell me the direction, right? So this is telling me I can buy Aussie dollar, New Zealand dollar. Now, if we drop down to the H4, like I say, it's a bit crap, right? For the want of a better word. You know, I don't want to start buying here. Really, I want to see a deeper retrace, you know, perhaps towards this, you know, this moving average river that I use, you know, at least back to in here, right? If not back to this level. So I want to see price come back into this vicinity, and then I'm very interested in buying Aussie dollar, New Zealand dollar. Will it get back there? It might not. If it don't, I don't have a trade. So Slugmeister, I am bullish Aussie dollar, New Zealand dollar, but I don't have a setup just yet. Let me have a quick drink of water, guys, because as I explained, my throat is like razor blades. And also, guys, if you enjoy my analysis, please don't forget to subscribe to my channel, Simply Forex. I'm sure the guys will put some links in the live chat. Right, let's have a look at some other questions here. Okay, Euro US dollar or pound US dollar analysis. So I have just traded pound US dollar and made some profit. So let's focus on Euro US dollar. And Slugmeister plays cricket. So I'm assuming cricket is why they call you Slugmeister. You knock it for 6, which is the equivalent of a baseball home run. There we go. Not only do we do trading, we do sports. We do sports education as well. Right, Euro US dollar. Again, I'm going to do a top-down approach, starting with the weekly. Right. So let's look at the weekly chart. Let's get rid of these alarms. Okay, so we can see the chart a bit clearly. Now, if we looked at the weekly, right, it's a buy trade. Okay, you can see we know Euro has been super strong, as has pound, right? But this level held, right? Let me zoom in a little bit so we can see that, right? This level totally held, right? It was once good resistance. It broke. It became good support once. And this candle, the wick held on to that level, right? So I would look on the weekly. This is looking like a buy trade. Potentially just back up to these highs, right? But on the day chart, you know, is a little less clearer, right? But we were in a downtrend at this point. Right, so let me go back to this point in time, because this is a good little thing on structure and trend. Right, let's get rid of this as well. Right, now at this point, there is no doubt in my mind that this is in a downtrend. Right, we are, right, this is where we're at, right? We're getting lower highs, right? We're getting lower lows. Okay, then at this point, I had daily downtrend and weekly uptrend. So I had conflict with the US dollar pairs and pretty much all of them, right? So I wasn't really trading it, apart from pound US dollar, where these two were aligned, right? So that was the problem. Now, if we roll on back to current time, now, I would class this as a structure break because we was in a downtrend, right? This was the last significant high, right? But we broke it with this candle. So once price pushes up and breaks that high, we are getting higher highs. So now all of a sudden, right, daily and weekly are in tandem. Okay. So I am interested in buying euro US dollar, right? But there's no setup at the moment because we're just, I mean, these are bearish candles, and then we're getting indecision, right? For me to buy this, I want to see a nice bullish candle, something like this, right? Then we can look to take it higher, potentially to one of these highs. But we're not seeing that yet, right? So that's what I would be looking for. So if you've, I'll show you, let me show you that in a minute, actually. Let's carry on with this. So let's drop down to the H4 now. Now, what we're seeing here is really a H4 downtrend. So again, for me to be interested, okay, for me to be interested in buying euro US dollar, I at least need to see a H4 structure break, right? So I would need, perhaps price comes up, it tests that level again, then eventually it breaks, right? Then I'd be interested, right? Perhaps a retrace, and then we go higher, right? I would be interested in that, but right now I'm not. You know, there's nothing telling me to buy euro US dollar, although weekly and daily tell me that's my direction, but nothing's telling me to buy it as yet. So I will patiently wait for hours, days, even weeks, right, for this kind of price action to play out. And if it doesn't, I won't, right? If it carries on down, yeah, I don't have a trade. Simple as that. Now, a trade that I do like, right, because as I said, I was selling pound, Christ, let me draw that again. I was selling pound US dollar today, right? And if anything, as I said, I'm not buying euro US dollar, but if I had to trade euro US dollar, right, if you said, Tom, you must trade it today, otherwise we will kick you in the shins, right, then I would buy euro US dollar. So if you look at this for a section, just cross-currency correlations, what does this tell you? This tells you that euro pound is a buy trade. That's what that tells you, right? I've got pound US dollar I want to sell, which is pound weakness, and I've got euro US dollar, which I want to buy, which is euro strength. So euro pound buys is the trade, and that is exactly the trade I would have took if I didn't get into pound yen. Because if you look at euro pound, look at that entry on the H4, right? H4, hit resistance, H4 break, right? What was once resistance, when it comes back and retests, right? We love this setup, right? We've got a nice big bullish candle form. Yeah, I would look to take price back up to this level. So I was going to take this trade, but I actually took pound yen, right? So I would start buying in here, stops below here, take profit here. I would take 1:1 and then let some profit run. So pound yen I do like. Let's have a look at pound yen because I'm still in it. Okay, so yeah, all good so far. Let's see what the indices are doing. Right, they're still coming down. Let's have a look at the S&P, Dow Jones. Okay, I like the fact that the Dow Jones has just had a structure break there, or broke a key level. So yeah, pound yen, and I took pound yen. So you know, I won't double up on pound weakness, right? So if I'm taking pound yen sells, right, and I take euro pound buys, right? If I enter both them trades, all I'm doing is just doubling my exposure to pound, right? And I don't want to do that. I will do that sometimes, right? You know, trade a couple of currencies that are correlated, but then I will adjust my money and risk management accordingly. So yeah, there you go, guys. That is what I'm looking at there. Right, what else have you got? Okay, so we're just seeing some congratulations. Congratulations, Nick, on 500k subs. Yeah, congratulations, guys. Well done. Do you want to give some of those 500 to me? I could do, you know, I'm nowhere near those numbers. Just half would be fine, if you don't mind. Right, what else are we looking at? Christian London, because your surname is London, and that is my motherland city. Let's have a look at the DAX. Let's have a look at an indice. Again, guys, let's do a top-down approach, right? So the DAX ranging, right? On the weekly, you can clearly see it's ranging, right? So prices come up, and this sums up the indices a bit, right, at the moment. It's like risk on, risk off, risk on, risk off, risk on, risk off. And that's, you know, that's depicted, word of the day, that's depicted here, right? We're in a range, right? It's like risk on, risk off, risk on, risk off, risk on, and this is where we're at, right? So we're ranging. So the only trade really is to sell from here back down to the lows, right? Or if we get a break of the range, I would look to buy, right? So let's see on the daily what price is doing at the top of the range. Now, I won't just sell the top of the range, right? That would be far too leery, right? So what I would need to see on the daily is something like this, right? So even if, you know, we're at this weekly resistance, we know this is weekly resistance, but I would still wait patiently for something like this, right? We get a structure break, right? We get a break of a low, we get a breakdown in structure, then I would be interested in coming down to the bottom of the range, right? I would aim for this level, perhaps even deeper into the range, right? So that's what I would be looking for. I think DAX sells at this level are good, but I need that confirmation on the daily chart. If you wanted to be uber aggressive, right, and not wait for a daily structure break, you could wait for a H4 structure break, which we have got, right? Yeah, you can clearly see it was building up, hit the resistance, you know, and now we've broken these key lows in here, right, with this candle. So this is interesting right now. If anything, I would sell the DAX. From a technical point of view, I would sell the DAX to there because we've broken structure, right? You can clearly see, even if I go left, you can see this was a nice level. Right, let's get the bottom of that candle. Has that broke? So what I want to see is that candle broke that low. The body of the candle broke the low. That is a technical break. So what we'll do, we just hover over the candle. If you look at the top of the screen, what was the close? 214.44. If we look at the low of the candle, this was 214.91. So yeah, we've broken that low with this candle. So sells in here, stops to be on the safe side above here, and I would look to sell that back down to here. So there you go. Hope that helps Christian London. That's what I would do with the DAX. That would be an aggressive entry though. Like I say, I would wait for a daily structure break for me to become interested. Right, what else? We've got 5 minutes left, guys. Please don't forget to subscribe to my channel, Simply Forex, if you haven't already. Yeah, and hope you're enjoying the analysis, guys. And apologies for my croaky voice. Okay, So creaking Jordans. Trader Tom, I've got a query on US dollar yen. Do banks start pricing in an expected move days before a huge news event? Expected Fed news tomorrow is a slim cut, wider rally up. So creaking Jordans, right? I don't trade like that. You know, I don't care what the banks are doing or what the banks think, or you know, all I do is trade the technicals. So let's look at US dollar yen, right? Now, you know, let's look at this part of the chart, right? Let's just look at this, right? Now, all I see is an uptrend, right? So I see US dollar yen flying up. I see an uptrend. Now, by that being in a strong uptrend, fundamental macroeconomic news, fundamental macroeconomic, even geopolitical news is going to back this up. It's going to be a weak yen, right? So chances are indices are going up, the economy's looking rosy, yen is weak, right? So I know that, but it doesn't come into my decision making, right? All I care about is we're in an uptrend, things are a little bit overbought. If we can retrace into here, I have a trade back up to there. That's all I care about, right? You know, I care about four things, right? I care about structure and trend. I care about support and resistance. I care about candlesticks, and I care about this concept of value, right? And then obviously I'm not going to trade into news, or, you know, I'm aware of when interest rates are coming out, CPI, the big news, but ultimately, you know, I'm just trading the chart, purely chart trading. So what the banks are thinking or doing doesn't come into my thinking, to be quite honest, creaking Jordans. Right, what else are we learn? Trader Tom, real Trader Tom. I am real. Let me just pinch myself. Yeah, I'm real. Right, let's have a quick look at gold. Actually, guys, okay, we've got 2 minutes. Let's have a quick look at gold, dead quick. Now, this is interesting, right? A day ago, I was a gold seller. I wanted to get in on this sell, right? If you go back a day, we was in an uptrend, broke down, broke out of this trend line, come back up, right? And we've been in a downtrend, lower highs, right? And, you know, we were getting lower lows anyway and lower highs, but even more short term, we're getting lower highs and lower lows, right? All I wanted to do was come from here and take it back down to here, right? And that's exactly what I wanted to do. But a day ago is when the NAS started dropping like a stone. Yeah, there you go. The NAS is dropping like a stone, so gold became strong. If we go back to gold, a day later, look at this, right? No longer a gold seller, right? So the indices were dropping. Gold is a flight to safety. Gold became very bullish, right? So all of a sudden, technicals are not making sense. This is in a downtrend, but we've got a huge amount of buyers based on macroeconomic news, right? So I'm staying away from gold, right? It's not making sense anymore. You know, I wouldn't even like to say, if you said, Tom, you have to trade it one way or the other, I wouldn't want to commit to gold, right? A day ago, I was a seller. This candle happens. I'm staying away from it, right? There's bigger things at hand. All right, guys. So, yeah, hope you've enjoyed my analysis. Always a pleasure being on the show, guys. Thanks for having me. And I'll see you all again soon.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Okay, what's up, people? Hope everyone is doing well. Thank you for having me back. Hope everyone is doing good. So, as always, we'll go through a bunch of markets today. My watch list, any trades I'm in, of course, any pairs you guys are looking at, feel free to drop it in the chat if you're in any positions or just want my opinion. Drop it in the chat and I will be sure to take a look. We'll probably pay a lot of attention to USD because that's where a lot of my interest is at the moment. I do have a position open on pound Aussie, which I'm still currently managing. Still looking for hopefully a break to the upside. We're starting to reject the highs here, which is a little bit of a warning sign for me. Perhaps if I do see a stronger rejection, I may just close the trade completely. I have closed about half of the position because we have come into a very significant level of resistance at the moment, which could very much reject price against me. So I do want to be quite careful of that. But I am looking to see if we can break out and continue higher. If I flick to the daily chart, this is more or less where I'm targeting the next kind of major high. Pound NZD, which is a very similar pair to pound Aussie, kind of made that move pretty much. Similar pair, similar kind of price action, bit of a consolidation, broke to the upside. We're trading at highs now. Of course, we had some NZD news earlier in the week, which really helped pound NZD to the upside, but I'm expecting pound Aussie to potentially follow suit. So I'm trying to hold on for that move in case we do go for a big breakout and perhaps a swing back to highs. But of course, I've got to watch my back as well because perhaps we don't do that. Perhaps price does reject resistance well. And yeah, if I start to see some conviction lower, I'll just pull the plug on the trade. That's the only position that I'm in at the moment. I was in a Euro USD short earlier this week, but I did close the trade pretty quickly. I actually took it on the 8-hour chart because I didn't really like how price was shaping up. But I am still pretty bearish on the pair, so I'll still be looking for entries. This was the trade which I closed roughly around here. Because I didn't really like momentum. It was picking up to the upside and overall we are quite corrective. So I'm looking to see if price can kind of break the floor here because we're starting to consolidate. Perhaps a strong close like this, and that would be something that would allow me to re-enter the position again. Because the idea with Euro is basically looking to find the next lower high. We've got one over there. Second, can we find a third? I think we can in terms of the characteristics. It looks like price is slowing down, becoming quite corrective. And looks like it is forming a lower high. If we were likely to break higher, I would expected more kind of impulsive behavior and more strength of the buys, which at the moment we're not quite seeing. So coming back to a nice area of supply, we had a lot of conviction in this bearish move. This to me looks like a pullback for perhaps to continue lower. And if that's the case, perhaps a push to the low here could be the next target for Euro. So perhaps a strong close, breaking out of this mess here, kind of clearing support, would be the trigger to really get the market rolling. That'll probably be my new entry for the position, probably a same stop loss in the same position with targets back down at that low. So Euro is still one of the pairs I'm focusing a lot on at the moment. Probably the more likely pair at the moment to actually potentially take a trade. It is still Thursday. We could still see the breakout even later today potentially. But we could very much see that by the end of the week. So Euro USD shorts, keeping a close eye on. DXY hasn't been great. Of course, if I'm going to see a big drop lower for Euro, I need to see some strength for the DXY, and that has kind of been a little bit tamed at the moment. You could argue DXY is kind of consolidating as well. So again, if the dollar can pick up some strength and see some conviction higher at the same time that Euro is showing some conviction lower, that'll be a really nice confidence for the trade and give me a lot of confidence to short Euro outright and look for that bigger swing. So I'm kind of hoping that we can see some more strength there for the DXY. We did break out of this descending channel. Let me drop back to the 4-hour chart. We did break out of this descending channel, which I did like. It was a nice confluence. Price was descending. Then we finally broke to the upside. It's a sign that the buyers are stepping in. Sellers are starting to back off, but we really lacked momentum. So need to see strength come in. Of course, that'll probably give us some weakness for the euro dollar at the same time. And that'll probably give some nice shorts on the breakout. And if you're a bit more on an intraday time frame, what you could be looking for is, of course, a similar breakout. But instead of taking shorts on the breakout, you can wait for some intraday pullbacks, perhaps a retest of structure. And if we can see the trend really form, there'll probably be at least 1 or 2 opportunities for pullbacks on the way back down. So there's a lot of opportunity there for euro. If USD does, in fact, gain some strength, there is a lot of opportunity, a lot of space for us to cover. But we're going to have to rely on dollar becoming strong, which at the moment, kind of a mixed bag right now. Let's see if we can find some strength, and that will really kickstart that move. So euro for me is definitely my preferred setup. What's up, Paz? Welcome to the stream. Hope you're good. Okay, we could take a look at gold. Not my favorite pair at the moment, I must lie. I mustn't lie. I'm not a big fan of gold. Very, very choppy behavior. I'll quickly go through it, but you'll see why I'm not a fan. And yeah, an S price makes a move to either resistance or support, significant resistance or support. I'm literally going to stay away from gold, as I have been doing so pretty well so far. USDs are pound USD. Yeah, we can take a look at both of those opportunities. Let's take a look at gold quickly. So gold, very, very flat pair. We've seen some rejection here and then, a lot of noise in the lower time frames, but I'm looking at gold in, at least on the 4-hour chart a lot more. And the way I see it, price has just been consolidating. We've got equal highs up there, equal lows down here, and price has simply just been fluctuating between those two levels. As of late, we haven't really revisited the high or the low. We're kind of just messing around in between. So yeah, price action hasn't been great. Of course, the overall trend for gold is very much to the upside. We've got a very bullish market. If we kind of not take into consideration the range, price of course has been flying, but we've entered the new phase. We've entered the consolidation phase. Of course, it's kind of 50-50 which way we break here. Do we continue the trend or do we reverse? I'll wait for the breakout to really kind of place my bets on that. But as of right now, we're just in the middle of the range, which is where the most noise, the most indecision will be. So that's really an area which I want to stay away. So gold, if I am going to take a trade, will be up at the highs here. If I see another rejection at the high, I think that's a great place for a short. And likewise, if price does make a move back to the low, and equally so, if we do reject well, I think that will be a nice place for a buy. And of course, if we do break out, we can discuss that as well. But at the moment, that's the only kind of situation, only setup I see for gold at the moment. In terms of USDZAR, and then we'll take a look at pound afterwards. So USDZAR still bouncing at support for this one. So we've got support in and around 17.47, and price has done a really good job at respecting that. Unless you're already in the position, I wouldn't really look to do anything now. This, of course, is clearly the level of support, so that's ideally where you want to put your stop loss below, or at least look for your entries in and around that level. Looking to enter now is a little bit late to the party, especially if you look to the left. You can see we're starting to approach an area of supply. This is a scenario where sellers could be looking to get into the market, which could actually give us another push back down. So I wouldn't be looking to enter the market. Really corrective on the way up as well, so it's not like we've seen strength. It's really slow and really corrective, which tells me that we possibly could be in for a move down. So if I'm going to look to take a trade here for USDZAR, and if I'm looking to buy, it would of course be back at support. Again, sometimes the simplest trade is the easiest trade. Don't need to look to do anything complex necessarily. It's just about timing well, maximizing your winners, minimizing your losses. And this evidently is a clear level to buy from. And likewise, if we do break through, could be a very nice level for a short as well. There are some support levels below, which I do think there's a good chance that USDZAR may still be looking to head towards. We have been in a pretty bearish trend, of course. We're a bit sideways now, but perhaps if we do break support there, I do think we can end up back at these lows, and that will be a great level to find a break and retest opportunity on. as it's been such a strong level of support, there's a good chance it will act as resistance as well. So if I was looking to trade USD, it's not a pair which I trade at the moment. I have done in the past, but I haven't traded it for a while. But if I was looking to trade it, my focus would be at that level, looking to see if we can respect it again, or we do indeed get a breakthrough. In terms of pound USD, yeah, really corrective on the way down. I have been bearish, on pound USD. I have been looking for lower lows and lower highs and looking to try and find a continuation of that. But this pullback was quite aggressive. I didn't really like it. It was really, really aggressive on the way up. I was looking for a much slower move at a couple of levels, couple of areas of confluences, which I was looking for pound to respect. But it did not do that in the slightest. I was originally looking at this support level. Price broke through that level with ease. Then I was looking at this trend line connecting these two highs, and price did consolidate there a little bit, but eventually did break to the upside. Didn't really give me much of an entry signal anyway. So because of that, I have been quite reluctant to sell pound, and we have respected the high well-ish. And now we're seeing a really corrective move back down. And this has the characteristic of a pullback. It doesn't really look like prices hit this level and reversed aggressively. It's more so hit the level and starting to potentially pull back some of this bullish move for perhaps a move up. So unless we start to pick up some momentum and start to see some conviction lower, I will be quite careful with shorting pound USD. This could turn into somewhat of an inverse head and shoulder pattern. There's your left, there's your head, and possibly your right shoulder could be forming for a push up. That's your neckline, of course, perhaps a breakage structure, and we continue higher. So I'm not quite convinced with the pound USD shorts. I am bullish on the dollar. As a result, I'm kind of expecting downside for pound, but the price action isn't backing that up. I'm a very technical trader, so unless the technical analysis isn't really looking great for that particular market, then I'm going to hold my horses for now. So unless, again, we see some strength, and that can give us maybe some intraday pullbacks to look into, or perhaps even a pushback to resistance again, and we can take some shorts off the back of that. That would make a lot more sense, but not now. Really corrective, I would avoid shorting, especially from a swing buy. So if you're in more of an intraday time frame, you can probably get away with that, but anything like hourly or 4 hour above, we need to see some conviction lower. So hopefully that made sense. Okay, we'll take a look at Euro Pound quickly. We'll go through Aussie Dollar as well. Toby, wicked. Also in Pound Aussie buy. Nice. Kept wondering why everyone keeps saying pound weakness. I mean, pound has been very, very strong, to be honest. Maybe in terms of, okay, pound's been strong, so you're expecting a bit of pound weakness now. Which I think is probably due at some point. Of course, we're going to see some weakness in pound. It's not going to be strong forever, but the past maybe, 2 weeks, maybe even 3 weeks, at least 2 weeks, pound's been one of the strongest currencies, and it's been performing pretty well. Okay, let's take a look at Euro Pound, and of course, this is another pound pair, which recently has seen some nice downside as pound has gained some strength, although Euro as a whole has been pretty strong as well. But Euro Pound, I don't see much of an opportunity here. The way I see it, we are quite flat, kind of consolidating here. Again, I like my kind of simple, obvious patterns. I don't want to try and force anything in the market, really. That's when you kind of taking trades where there doesn't need to be a trade taken. And what I can see here with Euro Pounds, we're back at resistance, and we're kind of having a consolidation off the back of that. Prices hit resistance, we're trying to sell off, the buys are not backing quite off just yet, so at the moment we're trapped. We're either going to see price break this out to the upside and the trend continue, or this could be a top forming, and eventually maybe we do start to see a bit of a bearish trend and price reverses. At the moment, support has been holding pretty well. In fact, you can even include support here to the left, and of course resistance has done a pretty good job as well. So you got your low of the range, you got your high of the range, and this is kind of the noise in the middle. So I'll try to stay away from all of this, because that's where I'm not seeing much significance in terms of where price is trading, and that's just probably where you're going to see a lot of noise happen as well. If you're looking for effective areas for a buy and a sell, it would be those areas. Again, waiting for price to get there, reject them well, then looking to take opportunities off the back of that. And if you're looking for momentum, if you've got a plan around momentum and trend following, I'd wait for price to break through one of these areas and show real conviction after those levels have broken, because that's when we'll probably start to see an actual trend. For now, we're probably just going to mess around between these two levels. So unless you're picking some lows here or the highs there, I would wait for the breakout opportunities, and hopefully that could kickstart an actual trend. And again, if you're looking to follow momentum, those are the type of opportunities you're probably looking to focus on. Inside here, you might run into a little bit of trouble. But Euro Pound isn't my favorite job at the moment. Okay, so we'll take a look at Aussie next. CAD Yen potential setup forming. Yen pairs have been quite interesting. I'll quickly go through some of them as well. But first, let me take a look at Aussie. So Aussie dollar looking pretty bearish. Another USD pair. Of course, we've seen a lot of weakness here, more so to do with Aussie than strength of the dollar. We just had a look at the DXY. That hasn't necessarily looked quite bullish, but Aussie has been falling pretty hard. And of course, if you go look at a lot of Aussie pairs and NZD especially, Aussie and NZD have been pretty weak, probably one of the two weakest currencies at the moment, and that has given us a nice move to the downside. But of course, we are trading at support right now. That could change. We could see a bit of a bounce here. In fact, I'm looking at the price action in the lower time frames, and that's kind of the impression I'm getting. We're really slowing down, really starting to struggle now, becoming very, very corrective. I could see something like this happening pretty soon for Aussie dollar. It might just be a retracement, because I am actually still bearish on the higher time frames. I do think we can see more downside when I do look at the daily chart. We've had this lovely ascending, really corrective channel, which has finally broken to the downside. We came back for a retest. So my expectation for Aussie is break, retest, now a continuation. And I'm expecting at least a push roughly into this area around 0.635. So on the higher time frame perspective, I do think Aussie still has room to the downside, but because of where we're trading at support, we might bounce first, maybe see 1 or 2 days of bullish price action before we do perhaps continue. If of course you are looking to short, now's not the best time to be doing that. So with Aussie dollar, if I drop back to lower time frames, especially with how kind of tired we're looking, if we could push to the upside, I think that would be great. We have left behind a pretty significant level of support and resistance. I would suggest if we could see some upside and even come back to retest that, that would probably be my preferred area to short Aussie dollar from. Whether we will see a pullback that big or not, I'm not too sure. But if I was to pick an area to short from, it would be this area. Nice breakout, a lot of conviction. We haven't come back for a retest yet. And of course, it has proven to be a sturdy level of support on the 4-hour chart as well. So that would be something I'd be after. But yes, there could be some nice buys beforehand to take advantage of before maybe some sells later on. If you are looking for the buys, I probably would wait for that break of that descending channel, maybe a strong candle breaking that out, and that itself could be a very nice entry with some stops underneath the low. But yeah, we are testing key support. There might be some upside there. I would keep an eye for that. Okay, so in terms of CAD Yen and Euro CAD, we can take a look. So in terms of CAD JPY, we are pretty we have been pretty bearish, and I'm still looking at more downside, but I'm not quite convinced with how we're moving. We're very, very slow, very corrective. I'm looking at the price action here, and to me, this looks like we're kind of grinding lower, which is more of a behavior of a market which is kind of getting ready to bottom out for a push higher. The reason why I have been bearish is because price did break through this counter trend line. So I was kind of expecting a bit of a bearish trend to form, maybe something like this, which could take us lower and perhaps maybe even to the lows there, or at least kind of tick some of these levels off. So that's what I have been looking for CAD Yen, but it does, I do rely on more strength coming in for the bears, more conviction lower. Like I said, it looks like price is kind of formed a bit of a wedge pattern, which is more of a pattern of price getting ready to turn to the upside. And again, trend lines are quite subjective. I'll probably say even more subjective than support resistance. So I don't always take them as gospel. If a trend line does break, it's a good sign that potentially more downside or upside could occur, but I do want more backing than that, more confirmation than that before I do really show conviction. So the trend line break was great. It's a sign that we could potentially sell off. Now I want to see a really nice bearish trend form with some good selling pressure. Not really seeing that. It's more of a corrective behavior. So CAD gem, this is kind of what I'm keeping an eye on. If we do see some strength breaking out of this, I think that'll be a sign to say that, okay, this could be a higher low in respect to that previous low, and that could be where we're heading towards. I mean, I'm looking at the yen basket. It looks to me that the yen is still somewhat weak, I would say, but it is overall quite mixed. Very, very flat here. We've been bearish for quite a while, of course. We have been weak, we have been falling, and yen pairs as a whole has been moving to the upside, but for the past month, I would say, yeah, since mid-July, we have been quite flat. So if this is going to be a bottom, I do want to see a really strong break to the upside, something like that. If we do get that for the yen basket, then you're probably going to see CAD yen fall, pound yen fall, euro yen fall, all of the yen pairs above really take a bit of a dive. But of course, for now, we might just continue to range, maybe even break to the downside, and that will, of course, mean a lot more weakness for the yen, and then we'll see the yen pairs rise. But it's a bit of a mixed bag for the yen at the moment, and that's kind of the situation we're seeing with some of the yen pairs. Let's take a look at New Zealand yen. I mean, New Zealand yen, of course, has been extra bearish because of what we had with the NZD news. So not necessarily relying on yen being strong, more so NZD being weak. So I actually quite like the breaking retest for this one. Either of these areas would do the job. But again, I wouldn't be looking for such a crazy move because I'm not too sure about the long-term analysis, the long-term direction for New Zealand yen. Is this a pullback for price to continue higher and bottom out? Or is this price potentially breaking out of this ascending channel to maybe attack these lows again? I wouldn't say I'm too sure. I would want to see the yen basket kind of make a move first, and that will give me a bit more confidence in terms of what the situation will be. But in terms of just looking for a smart place for a trade, not even looking for a big swing, I think both these areas are levels to keep a close eye on. You've got key support around 86.721, and you've got key support there around 87. A retest of either of those areas, I think, are smart places to go short and perhaps catch another lower high. And then we'll go from there. There's some areas probably you can target on the left, or just keep it relatively simple back to support again. So yeah, with New Zealand yen, especially with the NZD weakness, we have seen a lot of weakness there, so that's really got the ball rolling. But the yen, which is kind of the governing currency, yeah, if yen's going to be strong, typically it's going to be stronger than others. If it's going to be weak, typically it's going to be weak than others. That's really what's going to dictate the more longer term direction. In terms of EuroCAD, this has been pretty bullish. I have to give it to it. It has been pretty bullish, although we have just taken out some highs and we're looking fairly tight again. And I wonder if we're going to repeat the pattern price is doing at the moment, which is taking out these highs, correcting quite aggressively, taking out the highs, correcting quite aggressively. Are we going to do that again? I probably think we will. I mean, I'm looking at the higher time frames, in particular the monthly chart. Oh, that's the 1 minute chart, a complete opposite. We are still trading at significant monthly resistance here. Look to the left, dating back to 2018, even 2016. Really significant resistance here. Now, the thing about support resistance is it doesn't always hold. Sometimes it does break. We are testing key level now, but yeah, potentially that does break and price does continue higher. But until it does break, we've got to respect it. We've got to treat it as resistance, and it's an area which price could take a serious dive from. It doesn't mean I'm looking to short EuroCAD outright. It just means I'm keeping a close eye, not being too reluctant to follow the trend, especially when I'm seeing signs that the momentum is slowing down. We've just taken up major highs. I wouldn't say this is the best time to be buying EuroCAD unless you're maybe very intraday. You might get away with it, but in terms of swing trade, not the best time to be entering a buy trade. So if I was looking for more of a buy setup, I would wait for a much deeper pullback. There's a nice trend line connecting the dots here. We've got the first test, second test, I'll give you a third there, fourth. So this is kind of an area which I would like to see price pull back into. There's a lot of confluence here, perhaps a retest of some structure to our left there. That was a prior swing high. That could be turned into an area of support. That would be a nice area of confluence to pick a buy from. You're not trading at highs, you're more at discount. You've got a healthy pullback. Price potentially can go and attack the highs. Of course, still take into consideration where we're trading, so I wouldn't be too greedy with the swings. And if I'm seeing some red flags, I'll be very quick to exit that position. And of course, if price was to make a move like this and break through that structure, then we probably are going to respect the monthly resistance and probably see a pretty nice downtrend start to form. But we'll get into that probably closer to when that's actually happening. At the moment, still a smart area of confluence below us. So for now, that is kind of where I'm at. Okay, we did have some news earlier, PMI. I'm not too sure how much that's going to affect the market. Let's see how dollar's looking. Oh, okay, we're seeing a lot of strength there. Okay, this is looking interesting. This is looking interesting. I want to wait for this candle to close before I do get too excited. But if I do see some strength here, that could show some really nice signs on euro. And perhaps if we do get a break of this support area, that could be enough to trigger me into a position. Basically looking for this back to lows and then maybe even there. But I think we'll keep it simple. I mean, I'll be trading stops as well. But if you can get there, I'll definitely look to lock in some gains. But I'll be trading stops just to see how far I can take it. So yeah, Euro USD, interesting. Looks like dollar is seeing some strength right now. That's having an impact on euro. I like what I'm seeing. That's the 8-hour chart, and that 8-hour candle's just open, so it still has 7 hours before it does close. 4-hour candlestick, seeing some nice momentum. That's got 3 hours before it closes. And I always enter my trades based on closed candles. So I do have a bit of waiting to do before I do take any positions. Probably one of the benefits of the higher time frames that you're not really rushing into any trades. You can kind of take your time a little bit. Everything's kind of a little bit slower, so there's no speed, there's no rush necessarily needed. But I'm liking what I'm seeing, I must admit. Looks like strength is coming back into the market. Again, this 4-hour candle's got an hour left till it closes. News can be a bit awkward sometimes. We could start bullish, then pull back and leave some wicks. So it is vital we see some strength on the close, at least for me anyway, in terms of how I trade and kind of gauging momentum. Well, it looks like we're seeing some strength, which probably means other USD pairs are being impacted. Not so much Aussie dollar there. Pound USD, what we're looking at. Pound USD slightly picking up, still really corrective though. I want price to really drop if I'm going to be interested in shorts. I mean, I'm not interested in shorts, but on an intraday level, that could look interesting if we do kind of see some strength there. Dollar CAD. Looks like we're getting somewhat of a breakout here. Pretty impressive. USD CHF, we're still in that range. Yeah, I'm seeing some strength, but I'm not going to get too caught up in that because we've been bouncing for quite some time now. New Zealand dollar. Not much there. I suppose NZD might be gaining a bit of strength now in terms of having a bit of a pullback. Is maybe a bit oversold, a bit overstretched. So I can see some logic there. How about gold? A bit of a reaction on gold. Silver. Not much of a reaction in silver, still looking quite bullish. Okay, so yeah, my focus going into the rest of the week will be on euro. Of course, I'm still managing my position in pound Aussie, but that one's just basically keeping an eye. If I see conviction lower, I'll probably wait for that 4-hour candle to close before doing anything really. And that's still got another 3 hours, so I'll keep an eye. But yeah, if it does reject that level, I will just close the trade. Still kind of managing for a breakout, but we will see. So yeah, Euro USD, definitely my pair of interest at the moment now. Going to keep a close eye. I'll probably wait for the 8-hour to close, in all honesty, just for a more kind of a short entry. Because if price can keep up momentum for the 8-hour candle, that really shows that, okay, we're really bearish. If not, I'll be patient. But anyway, guys, we have reached the end of the stream. at least my segment. I'm not too sure about the end of the stream. At least at my end of my segment. I do really appreciate the opportunity to come here and chat with you guys. I do hope you guys have enjoyed the analysis. Thank you for having me. I'm sure the team have left my link to my channel, so if you want to check me out, feel free to go and do so. But I appreciate coming on. Have a great day, everyone, and I'll catch you all in the next one.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello everyone, welcome to my segment of the live stream. So let me check if everything is working properly. I do think it is. So I hope everyone is doing well. And if there is any traders from yesterday, I know I had a lot of questions yesterday. So if you can put it in the chat and I will go through all of the requests. Again, I have my chat open on the side. And I have also managed to put my trading view in my browser, so now I can actually open up all of the things that we need right here on the screen. So we need the Forex Factory calendar, we need the Edge Finder, and that should be much better now. Okay, Alan is here. Hey, what's up, Alan? So Alan says, came here to say happy 500K. Shout out to the A1 team for making it happen and the great community that makes it fun to be around. Yes, so big congratulations to Trader Nick and the A1 trading team for hitting 500,000 subscribers. I think they just hit 500,000 like maybe 20 or 30 minutes ago. So yeah, awesome achievement. And I'm really happy to be a part of the A1 team. So thoughts on your Euro GBP position? Yeah, okay. TRN says, do you trade stocks? What stocks do you think the best are right now with highest risk reward? Not Tesla. Okay. Yeah, so let's get into it. So I do have a Euro GBP position. And if you are in the A1 Trading Discord, you would get this position as a signal. So basically, took it on the 11th of August, went into some deep drawdown. I thought we were going to get taken out. Right now, we are right at break even. So this position, I took this one because the euro is in general right now a strong currency. I'm not sure if it lost the reading. If we go to the Edge Finder, Europe, okay, it's right now it's 50-50, but it used to be a pretty bullish reading for the euro when I took this trade. And the pound is actually a bearish currency right now. So the reason is stagflation. If you're not sure what stagflation is, it is when you get negative growth or falling growth, bad employment, and high inflation. So I think it is the second worst thing after a full-on recession, because it's really tough to climb out of a stagflation scenario. You know, you have your central banks and they raise and lower interest rates in order to stimulate growth or to battle inflation. And if both the growth and the inflation are down the toilet, if both are not doing so well, well, then you cannot raise rates and you cannot cut rates. So that is usually negative for the currency. And the UK right now, in my opinion, is experiencing a stagflation scenario. Okay, so that's why I'm short on the GBP, even though you're getting some positive GBP data. So during this time, you did get some, you got a cut from the BOE, but they were concerned about inflation. You got unemployment rate, which was kind of better than expected. You got GDP, which came in a little bit better than expected. You got inflation, which rising inflation. So even though you got some okay fundamental data, overall, if you look at the, let's say, the edge finder, and you look at, where is it? Inflation, CPI, and we go to GBP, you're going to see just inflation is rising. Okay, inflation is definitely rising. And if we go to GDP growth for the GBP, for the UK, it's all over the place. Okay, so it's a bit of a mixed bag. The growth is not that great. You have some negative growth as well. This is not the healthiest looking economy. So that's why I'm still long on the Euro GBP. I'm trailing my position. One thing which is a bit problematic is the swaps. So the swaps are getting a bit expensive, but part of the game, part of the commission when taking trades in the Forex market. So I'm just going to keep holding it and trail the position if the price does decide to go to the upside. So if the price does decide to appreciate, I will keep monitoring the position. I'll keep moving my stop loss below the swing lows. That's the game plan. So nothing has changed in general. What I'm happy is that I got in. I didn't get in straight on the highs. This is a pretty significant level of resistance. Instead, I managed to get in close to the 20 MA and kind of where the price is not overextended. So I'm kind of happy about that. Okay. TRN says, do you trade stocks? What stocks are the best right now? I do not trade the stock market. I trade indices. So let's see. Tesla. Daily chart looks flat. The daily chart looks a bit range bound and flat here. We had this massive push up in 24, then a massive drop off, then a bit of a pullback, and now we're flat. So Tesla, in my opinion, as a long-term hold, I do think Tesla is great to buy. I love what Elon Musk has done with Tesla. I think he is one of the most competent business people in the world, although there's a lot of controversy around him. I know he's politically connected as well, but I still think he's one of the smartest and the most competent people in the world. So Tesla, in my opinion, is a great long-term investment. As far as short-term trading goes, I think it can sometimes be very volatile, and I don't personally trade Tesla. What I'm looking at is the NASDAQ and the S&P 500. So we're starting to get the pullback. I think like every single person that I pay attention to and that I respect in the trading space has been saying the same thing for the last, I would say, 3 to 4 weeks. So you have Trader Nick, you have Chris Pulver, Brent Donnelly, Vukovic. So like the most competent traders and investors in the last couple of weeks were saying, hey, this is looking pretty overextended. You know, this may be running out of steam. This may not be the best time to buy. So a pullback may actually happen. So what started to happen? We started to get a pullback. So pullback actually did start to form, and it is currently possibly going even lower. Now, I would say the NASDAQ and the S&P 500 do heavily depend on what will happen with the Fed. So tomorrow we do have the Jackson Hole speech. If you go to the calendar, see Jackson Hole Symposium, Fed Chair Powell speaks. So that is the actually next important event. We did get manufacturing PMIs, services PMIs, both came in higher than expected, which should be good for the currency. Yeah, it's good for the currency, good for the economy, okay? So, yeah, it's basically actual number is greater than the forecast is good for currency. So that's why the US dollar appreciated, and my Euro USD trade is in some drawdown. So I am long on the Euro USD, which is now in some drawdown. We will see what will happen with that. But what you should pay close attention to, if you are looking to trade the dollar, if you're looking to trade the NASDAQ, is the Jackson Hole Symposium and the Fed Chair Powell speech. So everyone is wondering, will he be neutral? Will he be hawkish? Will he be dovish? If he is neutral, I would say we actually get a negative reaction. If he is dovish, we should get a positive reaction, maybe a little bit of a push up. If he's hawkish, so if Powell comes out hawkish, I don't think the markets are going to like it because there is a rate cut priced in. Let's just check that one out. So Fed watch tool, there is a rate cut that is priced in for the 17th of September. Okay, it's actually going down. The probabilities are going lower as far as we can see. So now the probabilities are 77.2% of a rate cut in September. So yeah, basically going down a little bit. We had a 92% chance. People are no longer as confident that a rate cut will actually happen. So everyone wants to see what Powell will focus on. Will he say inflation is still a problem? Inflation is sticky. We are in the wait and see approach. If he does that, I think Trump will probably lose his mind and you will have a crazy funny tweet coming after that. So I would actually like for him to be super hawkish, even though it would probably crush my Euro USD long position. I think just the tweet from Trump would be worth it. So hopefully he sounds very hawkish. And yeah, if he's neutral, I don't think there's going to be a huge reaction. But if he's dovish, we could see a push to the upside. On the dollar, it's an inverse reaction. So if he's hawkish, dollar should just explode to the upside. Because as I mentioned, we do have rate cuts priced in. So if he gives a signal that the Fed is not that happy to look for to make rate cuts, the markets will not really like that. As far as the NASDAQ goes, I'm looking for buys. So overall, I'm definitely long on this, on the US stock market. I do think the artificial intelligence story is still in play. I do think AI should push the price to the upside. Give me just 1 second. So I do think artificial intelligence should help companies, should increase profit margins. So I think the NASDAQ could be a great play long-term to buy. I just do think we're getting a bit of a pullback. I'm looking at this level as I have it marked on the chart. So if we do pull back a bit more, I'll be looking for buy setups. So I just need like 3 or 4 more percent. Yeah, like 4% pullback. That would be nice. So that's on my radar. Definitely looking for buy setups, and I want to get in at a bit of a better price. Okay, let's see. Next, Roberto says, "Hi Marco, nice to see a Balkan fellow on the stream. Nice to see you as well." Yeah, most Balkan traders are scammers, so tough to find someone who really trades that's from the Balkans. And most prop firms, like real prop firms, for example, SMB Capital or Positive Equity, there's just one real prop firm in the Balkan region, and that is Positive Equity. Whereas in the west of Europe, there's a bunch of prop firms, bunch of hedge funds. So the west of Europe is much more developed when it comes to trading. Aussie USD, gold, long, gold. Okay, cool. So let's see Aussie USD. In my opinion, it's pretty flat. Let me just quickly zoom on the 1-hour chart to see what's happening there. Yeah, just kind of slowing down, trickling lower. I'm neutral for the Aussie USD. If I check on the Edge Finder top setups, I think the top setups will be neutral as well. Yeah, neutral, absolutely neutral. So the score is 0. I don't have a bias at all. Like if you asked me that I have to give you a bias, I could not give you a bias, because maybe I can give you a bias that we are flat right now in a range. So if you buy the lows and sell the highs of the range, you could make money, but I would still wait for a fundamental reason to buy at this level. So yeah, I would be a buyer if I had to make a pick to buy the bottom, sell the top. Gold I have on the watch list. So here is my watch list. These are the things that I'm closely watching right now. And gold, I'm looking for buy setups. I do think gold looks very interesting right now, or doesn't look interesting, but in terms of fundamentals, it could be interesting. So if tariff tensions, if that becomes uncertain, gold should go up. And it's still kind of in the air. It's no longer in the focus, but in the background, there is still some talk of tariffs. So tariffs could be a problem. Then you have Powell and the Fed. What will the Fed do? If they cut rates, gold should go up in value. Cutting interest rates means printing more money, money being injected into the system. Inflation goes up, and people don't like inflation. So to battle inflation, they tend to buy gold. So I think if we get more tariff drama, if we get a rate cut, gold could very easily pierce and go higher. Then I would look to buy. Inside of this range, I'm not doing anything. So I do not want to get chopped inside of the range. I'm looking for a breakout to the upside. One thing that Trader Nick is looking for, and that I would find very interesting, is if we can buy these lows, then maybe it would be a good area for me to position myself for a buy setup. But I'm not liking that sort of a trade idea that much. So we could see the price trickle a bit lower, and then I could attempt a buy setup, because at that point, I'm no longer getting in the middle of the range. I'm kind of getting on the bottom of the range, so I can aim for the top of the range as my first take profit, just to be safe. But I would much rather let me just check the trend line. Yeah, kind of just being flat. Gold is being very flat right now. I would much rather prefer to see a breakout of these highs, breakout of the resistance level. So long term, it's bullish. I would say the overall picture, if you zoom out, it's bullish. But short term, I would say it's flat. Short term, it's flat. So I would be pretty careful to do anything inside of this range. If you're a range bound trader, if you're looking to buy the lows, sell the highs, or sell the highs, buy the lows, then this may be a perfect environment for you. You know, one more class of traders that loves this environment is options traders. So they can sell premium, they can sell calls, and basically they can collect premium, they can collect income as long as the price remains stuck in this range. I personally do not trade options because I don't have enough capital to do it, or I would much rather try prop firms and expand my capital, and prop firms do not offer options trading as of yet. But if you do have a big sum of capital, you can sell calls, and I think that would be a pretty nice play to collect income. I also know what you can do. What Nick is doing is you can sell calls in this environment. You can collect income while the NASDAQ is not doing much. And if the NASDAQ does decide to go lower, then you collect very nice income. So during these sort of market conditions where I'm short-term kind of bearish on indices, short-term bearish on the stock market, it's pretty smart to sell calls. If you can. If you can't, then just do nothing. Okay. I personally would not go short on the NASDAQ. I personally would not sell the S&P 500. I don't think that's the smartest thing to do. I think your edge becomes much better. You have a much bigger edge if you're buying on the stock market, because if you zoom out, most of the time indices are going up. So odds are already in your favor. If you're buying the NASDAQ, odds are automatically in your favor. And if you're selling the NASDAQ, odds are automatically not in your favor. Odds are automatically against you. Okay, let's see. Let's see. Tieran says, I think Nick's reasoning for hawkish cut is very correct and should be the reality tomorrow. Yeah, I kind of see the same thing. I think Powell will remain in the wait and see mode. You know, I think he's going to be a bit neutral. I don't think he's going to say, like, we're not going to cut, but I do think he's going to say inflation is still a bit problematic. We're data dependent. We're going to wait and see what happens. You also have to remember, we still have NFP. We still have CPI in September. We still have PPI. So we're getting employment data. We're getting inflation data, fresh employment data, fresh inflation data. So that is very important for the Fed to make an interest rate decision. And that's probably what the Fed is still waiting for. So maybe tomorrow we won't get even the full story. What should give you the full story is once you get those 3 data points released, well, then we can be pretty sure if there will be a cut, if there will be multiple cuts, or if they will be more neutral. But also the tone from Powell could definitely move the markets. And I'm leaning, if I had to make a pick, if you ask me, is Powell gonna be dovish or hawkish? He'll be hawkish. I'm like 90% sure that he will be hawkish and say that like inflation is still sticky. We're in the wait and see camp. CAD yen, any setups? Okay, let's see. CAD yen, CAD yen. CAD JPY. On the daily, it looks a bit flat. Edge Finder. CAD JPY. Bearish. So we're getting a bearish reading from the Edge Finder. As far as technical analysis goes, well, we have started to trickle lower, but I'm personally not convinced. I personally would not really be looking for sell setups on CAD yen. Let me check the economies. So CAD very strong right now, yen also strong. So bit of a problem here. Both economies seem to be strong in terms of fundamental data. So that does not really give me the confidence to sell CAD yen, and the technical analysis is not really there. I think there are some better opportunities. For example, buying Euro GBP, selling Euro CAD. That's one of the trades that Nick gave as a signal in the Discord. And then I saw it and I thought this was an awesome trade, because for Euro CAD, if you zoom out, you're actually selling at a very important level of resistance. Look at this swing high in 2016, 2018, and now in 2025. So there will for sure be some sort of a reaction, some sort of a bounce. And if you take a look at the economic heat map for the Euro CAD, you can see that the CAD is very strong while the Euro is kind of 50-50. So I do think this is a pretty good trade as well with a tight stop loss. I put my stop loss just above these highs, and it's a nice hedge for me as well, because I'm long Euro dollar, I'm long Euro GBP, and I'm short Euro CAD. So if these two trades go underwater, I still have Euro CAD, which should go lower and make me some profits. So I thought this was a really interesting trade, and I decided to take it with small risk. It's not massive risk, but I think that my two favorite trades for this week should be Euro GBP long and Euro CAD short. Okay, those are my two favorite positions. I'm not sure what the swaps are like on Euro CAD. We can go to the carry trade scanner. Let's see, carry trade. Euro CAD. Let's see. Whoop. Let's see. Euro Aussie, Euro CAD. Sell. Okay, a sell setup, you get positive swaps. That's okay. That's good. That works. As long as it's positive swaps, works for me. Negative swaps are a little bit of an issue. Tiran says, so basically it depends on different instrument structure. I think it will react different. They're so high, it won't draw. I'm sorry, I don't understand what you wrote down. If you can be a bit more clear. Yeah, I'm not sure what you're referring to. Tokolo says, hey Marco, do you trade corn? If so, can you analyze the commodity for I see bulls coming? As for platinum, bearish. I don't trade corn at all. I've never looked at corn. If you can give me the ticker in the chat, I can open up corn on my trading view and I can take a look. So if you can just write down the ticker that you want me to analyze. Platinum, I don't really pay attention to platinum. I'm not sure why this exploded up. I'm not sure of the fundamental reasoning of this explosion in platinum. Also, I know copper has been pretty crazy lately. Let's see silver. Silver is a bit flat here. But copper, just crazy, very volatile, heavily impacted by, let's say, geopolitics or trade wars, trade tariffs. So Trump made some crazy crazy tariff threats, which kind of moved the markets all over the place. So copper looks super crazy. Platinum, I'm not aware of the fundamentals for platinum. Okay, so I'm not aware of the fundamentals. That is why I cannot tell you much. In terms of technical analysis, I would say, well, the buyers are still winning. I mean, you had this massive leg of selling pressure on the daily, but I would say the buyers overall are still in control. And is it my favorite metal to look at? No, it's not, because if you zoom out from 2015, we were just super flat up until 2025. So nothing was happening. I think gold and silver are much more interesting because right now they're definitely moving. So they're definitely creating some steady trends. That is why I like to focus on currently gold and silver. If platinum does decide to explode to the upside in the upcoming few years, then maybe platinum will be interesting to look at. Okay, is gold bullish? Yes, gold is bullish long term, but short term flat. So long term definitely bullish, but short term range bound. I am looking for buy setups, but I need to see a breakout. I need to see a breakout of this resistance level first. Fade the DXY. Ballout says fade the DXY. Well, I mean, I don't know. I'm pretty neutral. You know, I'm pretty neutral on the dollar. I cannot give you a clear reading. The dollar is kind of bearish when it comes to data, but I think we need to update. I think the manufacturing and services need to update, then they will become bullish, and this story changes a bit. It becomes super flat, super neutral. It all comes down to the Fed. It's super tricky what the Fed will do. No one knows. I've been reading a lot about this from people that I really respect in the markets, and no one really knows what's going to happen. What will Powell say tomorrow? Will he be hawkish, dovish, neutral? They kind of expect him to be hawkish, but there's still then NFP, PPI, CPI before the next Fed meeting. So maybe the next NFP comes in really bad, so they have to cut rates. It's all still in the air. Nothing is guaranteed. You know, even the Fed Watch tool, one day it's 90% of a cut, the next day it's 80%, then it can go to 70%. That's why on the dollar, I'm a bit neutral. I'm a bit flat right now. Yes, I do have my euro dollar long position, but I don't want to get into more dollar exposure if I'm being honest with you. I have to wait this out. This looks super flat, even as far as technical analysis goes. So Roberto says, any good prop firm, what do you use? I would say to check out FTMO and DNA Funded. I know DNA Funded is a sponsor of A1 Trading, so you can get a discount. The discount is A1T20. Okay, so A1T20, you get 20% off. DNA Funded, FTMO. I personally use FTMO, oldest prop firm in the game. They are the most reliable. I mean, the prop firm space is really volatile. It's a dangerous space. There is a huge conflict of interest because, if you didn't know, prop firms make all of their profits from the failed challenge fees. Profitable traders get paid out from the failed challenge fees. So when you make money, the prop firm loses money. There's a huge conflict of interest. It works as a casino. That's why prop firms, most of them are very skeptical and they don't want to pay you out. So you really need to go with a reputable firm. So check out DNA Funded with a discount. Check out FTMO, and the 5%ers is good as well. But don't expect much. You know, only like 1 or 2% of traders actually reach a payout, and you can still get denied a payout. It's a tough game. It's a tough game. Okay, GDX ripping past all-time highs again. Palladium, you can type corn, but pick the CFD to see the candles clearly. Short index, I saw your video about CFD prop is cheaper than futures prop, but that's considering many months to take a challenge, right? Yeah, I'm not sure which video you're referring to. There's a couple of videos on my personal channel, and then I made some videos for the A1 Trading channel. So I'm not sure which ones you're referring to, but futures are definitely more expensive than CFD prop firms. So CFD prop firms are definitely cheaper, but US clients, I think they can only do futures. So futures are kind of reserved for US clients. My recommendation is go with a CFD firm. Okay, I think it's more cheaper. You just get the two-phase challenge. I think that is the best model. So the two-phase challenge model should be the best. Let's quickly take a look at corn, and that's going to be the last one for today. So let's see. If I type in corn, CFD, daily chart, I mean, it's super bearish, right? Super bearish. I'm not aware of the fundamentals. I don't know anything about fundamentals of corn. As far as technical analysis goes, most of the price is below the 20 MA. I would say it's a clear downtrend on the daily chart, getting some bullish pressure right now. So I would say this overall is bearish with a slight bullish last leg, but nothing that confirms an uptrend really. I would need to see more bullish price action to confirm an uptrend. As far as the price action goes right now, I would say this looks pretty bearish right here. Okay, so I would be bearish on corn up until this level of support. This would be a very clear level of support. So you have some free area for us to hit the level of support, but I'm not the corn expert, so you shouldn't really listen to what I have to say. Okay, that's about it. I've ran out of time. Thank you guys very much for watching. You can catch me on my personal channel today. I'll be live streaming at 4:30 p.m. Marcos Trading Journey, or you can catch me tomorrow on the Trader Nick channel. I will be live streaming again at the same time. So good luck in the markets. See you guys in the next one. Goodbye.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.